after it's all said and done. So, yep, no worries. So let's get going here. Ichimoku Kinko Hyo. So one of the things that is kind of aggravating, and I cut out a lot of slides here that I used to use because it just got a little too much. But if you use Japanese candlesticks for trading, and I delineate a difference between trading and analysis. But if you're using Japanese candlesticks to trade and you're not using the Ichimoku system, it's kind of like using Windows 98 today. And there's a lot of reasons for that. But the two main ones, and the primary one is that um, the guy who created the Ichimoku system, Gochi Hosada, he designed it to be an upgrade of Sakata's original work on Japanese candlesticks. Japanese candlesticks, they were developed before the Meiji Restoration during the Edo period when the Tokugawa shogunate was still a thing. And yeah, I mean, so they've Japanese candlesticks predate American bar charts by a couple hundred years, a little more than a couple hundred years. And the other thing is that the Ichimoku system, it is, if you're not using it and you're trying to trade with Japanese candlesticks, you're kind of you know almost 100 years behind the times. But this is what it looks like. Probably the thing that sticks out the most that people have seen but maybe don't know what it is. Um, not your kid's equivalent, not your. It's true. Is these big blobs of color on the chart, and we're going to get into what these are. It looks very complicated, especially if you're very new to technical analysis or you're new to. Well, yeah, if it just looks like there's a lot going on, but I promise that you're going to get it. And a lot of the issues with, and this is just my opinion. Um, I'll get into that here in a second. But Japanese analysis is different than Western analysis. They're complementary, but Japanese analysis really allows for a lot of interpretation and dynamic behavior. Whereas in Western analysis, you have a lot of, do this, do that, don't do this, don't do that. If this happens, that is not true. You have to wait for this to happen for it to be true. There's not a lot of wiggle room in Western analysis. A good example of that is Elliott wave theory has a lot of very strict rules associated with it, or Carney's harmonics. Sometimes they call them Gartley harmonics, but really Scott Carney's the guy who discovered most of them. Carney's harmonics have a very strict set of rule set to those patterns. So, but that doesn't mean that they don't work together. Japanese analysis and Western analysis, they complement one another very well. But I feel like a lot of people struggle with Japanese candlesticks in their trading, not in their analysis, but in their trading because there's we incorporate a lot of Western theory and tool sets to work in conjunction with a Japanese chart style, which is more dynamic. So it's no wonder that there's a little bit of struggle in that when you think about it that way. But this is a fantastic system because it's useful in any market, any time of day. It's been used for years. And one of the cool things is that it incorporates so many different parts of technical analysis, different components that you would learn. It's like if you learn this first, I've had other students mention this, but if you learn this first, when you start to learn other concepts like of congestion, pullbacks, throwbacks, those kinds of things, they become a lot more easier to understand because you've been using those things and putting them into practice already before you even know what they were called. So that's one way to look at it. Um, Ichimoku is an indicator on a lot of software. It's not an indicator though. It is a full trading system. If you look at if you're someone who's always looking for, okay, I want something that is a trading system that is like the full suite of these are the things to follow. This is how you use it. The Ichimoku Kinko Hyo system is that. It's always weirded me out ever since, and I didn't know any better either until I learned more about it. But the Ichimoku system is not an indicator. It's several indicators making up a full system. Um, and I generally use the Japanese names for the different parts of it, but I try to remember to use the English names too. Depending on the software that you use, it will have the English translation. So the Tenkan-sen will be called the what is it called? I never use them. I haven't used the English versions in a while, but like the Kijin-sen would be called the baseline. Um, the Chiku span would be called the lagging span and all that. But again, it looks and sounds confusing if it's new, but it's actually very it's like anything that looks really confusing at first. But once you learn the basics, then it doesn't seem so confusing. It's actually very fairly straightforward. Okay, so some books. I just want to get these out here. If you don't pick up anything else from this class, this is I think the most useful thing that I could give you is 5 authors to take a look at, because if you Google the Ichimoku system or even you go to Amazon, you're going to find a shite ton of books that are self-published by people. I try to read a lot of them. There's not really any good ones, but these folks like David Linton, Karen Pellioli, Manesh Patel, they are, they're in the technical analysis field. They're professionals. Their books are published by um, like Wiley publishes, 2 of those authors. They are known experts in the field, and they know what they're talking about. So if you want to know, people who know what they're talking about, have published works before and update those works over the years, these are the 5 authors that I recommend. The best, I used to recommend Karen Pellioli's book, or sorry, Nicole Elliott's book as like the first Ichimoku book. I've since changed that to Charles Kunitz. His book is fantastic. It's the best one so far as how the things are laid out. Um, but the title of his book is, got it right here. Ichimoku Charting and Technical Analysis. I don't know if you'll be able to see this very well, but that's his book. Is this being recorded? Yes, it is being recorded. Yep. Okay. So what does Ichimoku do? It does a lot of things. You can read all of these right here. I won't read them verbatim, but essentially what Ichimoku does, it establishes where past, present, and future zones of importance are going to be. Um, there's a lot of people, even people who are familiar, know what the Ichimoku system is, don't know that the system also has its own time, wave, and price principle. Uh, like the wave principle is very similar to Elliott theory. The time principle has a lot of similarities to Gann's work. Um, and it's interesting that Hosada created these concepts without ever. I'm assuming that he never met never met Gann or Elliot. But nevertheless, they all kind of, both of them, all of them, they kind of came to the same. The stories are a little different, but the conclusions are very much the same. That makes sense. Now, yeah, we'll keep going here. So, what are some advantages of the Ichimoku system? First off, it's autonomous, meaning that it's got a strict rule. It's not strict. There are things that are strict, but it's not something that you have to take away from or add to or update. Okay, it's autonomous, meaning it's just naturally going to operate the way it should. It's the upgraded form of Japanese candlesticks. it is Japanese candlesticks 2.0. Okay, that's ultimately kind of what I think is the most important thing to wrap your head around, is that this upgrades Japanese candlesticks already, and Japanese candlesticks are insanely good for analysis because they tell a story. Each candlestick tells a story. It's like reading a book. There's the opening, and then you have the high point and the low point of the story, and then you have the end of the story, and did it and on a high note or a bad note, um, or was it just blah and you need a sequel? That's what Japanese candlesticks do, and the Ichimoku system improves upon that by putting more context and layer to it. The Ichimoku system shows where there's indecision, ping ponging of things, things that are not making sense. It shows you when that's happening. The short term trade signals are verified by stronger signals. The strategies are simple. That's I've thought about getting rid of that one because they're not simple when you first learn. It's a lot. It seems like a lot, but the other thing is that there's 3 time frames present on the chart. So when you look at an Ichimoku chart, the daily Ichimoku chart, you're really looking at 3 time frames on the daily chart, which is kind of a cool concept. Um, the other advantage that I don't list on here is that there are not very many pieces of analysis that project forward on the chart on your screen where future levels of support and resistance are going to be. Yes, you can do that with trend lines and horizontal lines and all that jazz, but there's not a lot of trading systems that do that for you automatically, or that it's not a part of the system. Whereas with Ichimoku, it is. there's 5 components of it. We talked about Ichimoku being an indicator and how it's not really an indicator. It is a trading system. So there are 5 indicators within it, if you want to think about it that way. You have the Tenkan Sen, the Kijun Sen, Senko Span A, Senko Span B, and the Chiku Span. Some people say, well, there's only 4 because you have the cloud, but the cloud is, well, we'll get into that. So this is what we're going to break these down, and we're going to look at them, understand what they are, and how to interpret them. And we're going to start off with the fastest one, or the weakest level. That is the conversion line. Now, the conversion line, or the Tenkan Sen, it's a 9-period average. Now, instead of like a normal moving average, where it calculates the average of, like a standard or a simple moving average will take the close of a certain amount of periods, average those numbers together, and plot the line. In Ichimoku, it doesn't do that. It takes the midpoint of the highest high and the lowest low of the last 9 periods, and that's what gets plotted. That's why when you look at an Ichimoku chart, you'll see periods where it's not wavy like a standard moving average. You'll see it kind of jag up, and then it'll have periods where it's flat. That's everything in Japanese analysis is focused on the idea of equilibrium, and I kind of teach like a master's level course on Japanese analysis, and it's the history of Japanese candlesticks. It's very much a culturally grown and developed form of analysis, but equilibrium is at the core of Japanese candlesticks and the Ichimoku system. So it's the fastest moving average in the system, and it's the midpoint of the highest high and the lowest low of the last 9 candles. One of the things that I stress a lot when I talk about candlesticks in the light paper, I talk about these gaps that show up. Getting a little bit ahead of I won't get into it. I'll just keep moving. Got to stop myself before I go off in tangents. So that was the Tenkan Sen. Now let's talk about the baseline, and then we're going to look at we are going to look at some live charts, and I'm going to ask you guys for something to look at: cryptocurrency foreign currencies, whatever. We can look at anything and use the system, and it's very awesome because it can be used anywhere on any time frame. The Kijin Sen. This is kind of like the bread and butter level for people who love to day trade or swing trade. Um, it represents medium term movement, just like the conversion line. The baseline is plotted by taking the highest high and the lowest low of the last 26 candles. That's how that level is plotted. There's a lot of trading strategies in Ichimoku have the execution kind of planned around the Kijin Sen. Um, there's also kind of like a max mean that I call it. That prices move, and we'll get into that too. In other words, this is this is kind of more for like long term swing trading, but there's a range that each instrument on each time frame likes to move before it corrects back to the Kijin Sen. So in other words, when you pull up an Ichimoku chart and if it looks like the body of the candlestick is like way far away from the Kijin Sen, that is probably something that is way too far extended. And I neglected to talk about one thing with the baseline as well, is that the baseline, sorry, the conversion line. Let me go back to it quick. The most important part of the conversion line isn't so much it being a level of support and resistance. It's the momentum indicator of the Ichimoku system. Um, and so, and that momentum is established by the slope or the angle of the conversion line. So that's, I think, the best way to really look at the conversion line is as a short-term level of equilibrium, but most importantly, as a measure of momentum. So we measure momentum different ways. There's different momentum indicators. Probably the most popular one is the relative strength index. But the Ichimoku system has one that's inherent in it, and that is the conversion line or the Tenkan Sen. That is the momentum indicator of the Ichimoku system. All right, so there is a relationship between oil on the 12-hour time frame. Yeah, I can take a look at that after this. Remind me though, because I'm going to forget. But there's a relationship between the conversion line and the baseline. All right, they represent the market's pulse. Okay, I guess that's the best way to describe it. The conversion line indicates volatility by the strength of the slope. I mean, you can read this on your own here, but in a nutshell, you have the Kijin Sen kind of calling out where equilibrium is at in the near term, and in the short term, the conversion line does that as well, or the Tenkan Sen. But one thing that is a huge mistake that you'll see people do in general with technical analysis is moving average crossovers, and crosses of the conversion line and baseline, or the Tenkan Sen and the Kijin Sen. They're not a signal, and for the love of God, just I'll make this point by just going through the slides. So here's a daily chart of the pound Kiwi, the British pound and the New Zealand dollar. It's foreign currency pair. It's on the daily chart. Now I've put these two vertical black lines. This is from back in 2019, May 13th, 2019 through August 13th of 2019. All right. Now, if we break it down to the hourly chart, get rid of everything on the screen and leave only the Tenkan Sen and the Kijin Sen, this is what it looks like. All right. I mean, how many crossovers on the hourly chart are there? I mean, these arrows are not even pointing out all of them. There's a shite ton of crossovers and cross unders. It's just, you'd be whipsawed all over the place. Now, compare it to the daily chart where, you have like two, okay? So you have two crosses that whole time. on the daily chart versus the 50 plus in that same date range on the hourly chart. Um, and like I said, moving average crossovers, they suck. They're a great way to lose money. I will say, though, that the reason I remember the reason why I use this example is that one thing that I do pay attention to on the daily, weekly, and monthly charts are the time between the last crossover. And for whatever reason, if it's been 90 bars, 90 candlesticks, whether that's daily, weekly, monthly, hourly, if it's been 90 candlesticks since the last cross of the Tenkan-sen over or under the Kijun-sen, that is an event to pay attention to, not to trade off of, but to kind of go, hey, this is kind of a big deal. This could be setting up for something. All right. So just keep that in the back of your mind. Now we get to the juicy part of the Ichimoku system. This is the thing that really puts it together. It is the creme de la creme, the blah, 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 whatever you want to call it. It is what makes the system what it is, and that is the cloud, or the Kumo. And it's made up of two parts, Senko Span A and Senko Span B. Why are they colored in? Because it's I don't know who did that first, but we'll get into that here. So first off, you need to understand that the cloud is a very, very horrible, nasty place. All right, it is. There's a lot of trading systems that tell you, when to enter your trade, when to exit your trade, but there's not a lot of trading systems that do that and tell you when you should not do a damn thing. The Ichimoku system does that, and it does it in a very big red truck, hard to miss kind of a way, and that is with the cloud, okay? And when I mean everything bad exists inside the cloud, I mean literally everything bad exists. People who eat peanut butter and mayo sandwiches, people who go out in public with their socks and sandals on, pedophiles, Hitler, Confederates, Hamas, blizzards. I hate blizzards. Putin. I mean, everything, STDs, everything horrible in the world, and cilantro, because cilantro to me tastes like soap. And I hate that it's in so many things because all it tastes is like soap was put. So cilantro's in the cloud, and then hornets, and then finally this guy. Yeah. So everything bad in the world is in the cloud. So you don't want to be in there. All right. So what is it though? It's the space between span A and B. And so if Senko Span A is above Senko Span B, the space in between those two averages, they color it green, or some software may color it blue or orange, or you could color it whatever color you want. If Span A is below Span B, then the space in between the two is colored red, or you could color it pink. That's all. It's just a very easy way to look to know. Stay away from it. And we'll get into how it's when we get to the real charts. We'll kind of go, with how does it look on the live chart, and determine how these things are plotted. So, Senko Span B is, if you're looking for, because people always ask, okay, well, which levels are most important? Rate them from strongest to weakest. Well, the conversion line is the weakest, but the strongest is Senko Span B. It is hands down the most important, most powerful level of support and resistance within the Ichimoku system. And it's calculated very easily. Just like the Tenkan-sen and the Kijun-sen, we take the highest high and the lowest low of the last 52 candlesticks, and then that is moved forward on the chart 26 periods. Okay? So don't try and think about that in your head, because we're gonna look at that after we're done here. But it is another thing with Senko Span B is when it's flat for a long time. Somebody's gonna ask. We did ask, how long is too long? I don't know. It's if it's looks like it's been flat for a long time, that's something to pay attention to, because that is a sign of strength, and those levels are often, most of the time, they are very difficult to close above or below. Not so difficult to cross, because you have a lot of fake outs and shakeouts that occur against very strong levels of support and resistance, but it's difficult for prices to close and then stay above or below that level. Um, yeah, thick clouds, they represent strength, difficult to cross. Thick clouds tell us when not to trade. I put in parentheses me, because that's what I always say about it. If it's inside the cloud, don't trade it. Thin clouds are different. We're gonna get into that, but thick clouds, like big, it looks like somebody just like spilled juice, or you could think of it like just this morning. If it looks like my son, who was throwing his stuffed elephant at his sister's head, knocked over the orange juice on the table. If it looks like juice just spilled all over the table, prices in it, that is a big cloud, and you don't want to be in there. Um, yeah, it's just, no matter how tempting it may look in your oscillators and on other things. And lastly, clouds represent volatility, indecision. It's just a horrible place. It, just really want to stress that it sucks. All right, so if we're looking at, God, I remember this. This is the euro, and like euro in 2018 and 2019 sucked. Daily chart of the EUR USD, the euro dollar. Let's get rid of everything except we're gonna get rid of the Chiku span, the Tenkan Sen, the Kitchen Sen. We're just gonna leave the candlesticks and the cloud on the chart, and that's what it looks like. That's the price action. Okay, that is what sucks about the cloud. I mean, there is no rhyme or reason to what the hell is going on here. Okay, I affectionately call this place the place where trading accounts go to die. Um, just stay away. Like Nancy Reagan, just say no, move on. Don't look at it for a week or so. Just don't. In fact, the first thing that you should do when you pull up a chart, I'm talking about, and what I'm talking about here is, I won't make it confusing. The first thing that you should do, if you trade on a daily chart or an hourly chart, 4-hour chart, 5-minute chart, whatever time frame it is, you execute your trades. The first thing that you should do is look at that instrument, whether it's Bitcoin, the euro, the NQ, SPY, whatever, Mullen, whatever it is. The first thing that you should do is look at that Ichimoku chart, and if the current price action is inside the cloud, you just say no, okay? Because if it is, again, walk away, leave it alone. There are other fish in the sea. There are other women to find, other men to find. This will just break your heart and pretend like it's going to be nice to you forever, and it won't. It will leave you, take your bank account, come back, and then take your car and the dog. So just stay away from the cloud. I think I've made that very clear. Now, one thing that is cool about one of the authors, Manesh Patel's work, is that he discussed and discovered something that was, and I remember I was redoing slides 6-7 years ago, and I remember like making new notes, because you read a book, you didn't get everything. I don't know if any of you read a lot, but even if it's like a fiction, it's interesting. Sometimes you pick up things you didn't realize, and I find that with like same thing with books on technical analysis. They're just some things you go, huh, oh, well, that makes sense. But one thing I didn't catch for a while was that Patel made an observation that the other authors that I listed did not, and I call it his two clouds theory. That's what I don't. He doesn't call it anything. He just made a point to talk about it in his book, but I call it his two clouds theory, because it needed a name. All right, so let's just look at what he's talked about. So this is gold's chart. This is all the way back in, when was this? Geez, 2018. Okay, Gold's chart in 2018, in November. Like I said, I need to update these things. So, what Patel talked about is that you should look at the two clouds. So, you have two clouds. You have the current cloud, which is where price is currently trading. So, when you're looking at the screenshot, that red candlestick, the current cloud is what's below it. The future cloud is what's all the way up ahead. Okay, that's all the way up ahead. That's I don't know how else to describe it. It's out there in front where price has not traded yet. So that's the future cloud. And what he said is that when a major trend change occurs, the future cloud is thin, and both span A and B are pointing in the direction of the cloud. So what does that look like? Well, it looks like this. This is the other thing. People ask, well, is that a thin cloud or thick cloud? I don't know. I mean, it looks thinner than the thicker clouds. I mean, when I was going through the beginning of the slides, like, some people have difficulty with the Ichimoku system because they want a very clear, this is what this is what it isn't. They want a very, they don't, people don't like to use interpretation in their trading and analysis. And unfortunately, folks, you have to do that. Especially with Japanese analysis and Japanese trading, it is very much something that you have to interpret. So to me, I mean, it's common sense. To me, it's if I look at the cloud on the left, that looks a lot thicker than what's right there. It's thin. So don't need to spend too much more time talking about that. So when we look at this, you have current span A and B. They're pointing in the direction of the future cloud. Okay, future cloud is green. Those two lines are pointing up. It's thin. The resulting price action afterwards was this. Now, of course, it's very easy for me to go. And by the way, don't look at this and go, "Oh my God, this is a holy grail." I just learned. No, because this doesn't always happen. Okay, there's plenty of times when you're gonna have a future cloud that is thin, and span A and B are pointing towards it, and you may think, "Oh, just wash my hands of this. This is an easy trade." No, yeah, you can't be hands off. That's how you get into accidents. So, yeah, just by the way, my wife and I were just in Arizona for 4 or 5 days over the weekend, and we were in the Phoenix Mesa area, and they have these cars all over the place with nobody in them, just driving around. It's crazy. I know it shouldn't be crazy, but it was nuts because there's so many of them. It's just kind of weird. All right. Now let's talk about the last component of the Ichimoku system, and this is the secret weapon, I call it, of the Ichimoku system. And out of all the parts of it, it's the simplest one. There's no fancy calculations you need. You just have to count on your fingers, basically. But this is the hands down like pin that makes, this is the link that makes the Ichimoku system work, is the Chiku span, or the lagging span. Now, what is it? Because if you look at it, if you look at an Ichimoku chart, there's one thing that usually sticks out that people go, "What the hell is that thing?" It is that it looks like an appendix, like it's a useless thing that's just floating around there. Like, why is it there? In fact, you can go to YouTube, watch a lot of videos on the Ichimoku system, and there are people who don't know what it is, so they just get rid of it. Like it's like it's the appendix or the gallbladder. It's like, well, we don't know what this is here for, so let's just get rid of it because you don't need it. It's just the weirdest thing. In fact, that's what I was taught first. Was that it was just that it was just like a reference, and it wasn't until I did my own due diligence and learned more and reached out to these authors. And I'm like, wow, that's weird. So the Chiku span, lagging span, it's that floating line behind price that just seems like it doesn't belong there. But all it is, it's the current price. It's the current price shifted back 26 periods. That's it. Okay. It's not the the highest high. It's not the midpoint of the highest high or the lowest low or the anything fancy. It is just a mirror image of the current price shifted back 26 periods. Yeah, Pioli and Patel said that it's like the market's memory, and it also represents momentum. I don't know about the momentum part, but um, maybe. But David Linton in his book, his books were, I don't even know if his book's in print still, but his book was one of the first published for Western readers on the Ichimoku system. Did Steve Neeson talk about? No, he didn't. Steve Neeson is the guy who brought Japanese candlesticks to the West. But for some reason this is something I've always wondered. And if somebody knows the answer, I'd love to know. But yeah, he spent time in Japan to learn Japanese candlesticks and bring them over. But the whole time he was there, he didn't talk about the Ichimoku system, and which is weird to me because when you talk to some of these Ichimoku experts from the West, these authors, like some of these authors, they learned about it because they were working for a trade desk or a prop shop or a firm in Japan, and everybody used this, and they had no idea what it was. So it's weird to me that he wasn't exposed to it. So I don't know why that is. I have no idea. It's something I've never figured out. So the lagging span, okay? Again, all it is, it's the current price shifted back 26 periods. So really what you're looking at is a line chart next to your candlestick chart. And this kind of makes it a little easier. So if you were to remove the candlesticks and use just a line chart, that's what this is. It's just all it is. It's nothing fancy. It is just the current close or price level shifted back 26 periods. Now, one of the things about it that's really cool, I don't know if I put it in here or not, but the lagging span will respond to the same support and resistance levels within the Ichimoku system that the current candle will. So it's like you're looking at two candlestick charts at the same time. And so you'll see times when price breaks out outside of the cloud and you're like, oh my gosh, there's, it's above the cloud, it's above the Tenkan-sen and the Kijun-sen, prices just has nowhere to go. But all of a sudden, for some reason, prices just get stopped. Like, it's like, why isn't it going any higher? I bet if you look at the lagging span, it came up against the cloud, or just Senko span B. Like, it found resistance up against it. Why does it behave like that? No idea. Goichi Hosada created the system. It seems to work. Seems to respect the theory behind it a lot. And it's just something that I've observed, and I know that it. I mean, you can lagging span breaking the bodies is one of my favorite. Yes, that is. I don't think I write about that in here, but I do write about it a lot in the light paper, or when I used to do a lot more live sessions. When the lagging span moves above the candlesticks, if it's been kind of choppy trading inside of it, that's a big deal. But another thing that Patel talked about was this concept of open space, and that is when the lagging span is in a place where it won't intercept horizontally the bodies of any candlesticks over the next 5 to 10 periods. So, and also the lagging span can sometimes give you the warning sign that you need that a market's consolidating. So if you see a market kind of trading sideways and you're wondering, is it just short-term consolidation before it breaks out, or is this like something that's going to last a little longer and then we get a pullback or a throwback? Watch where the lagging span is. If it starts to get within 4, 3, 2, 1 candles where it's going to start moving up inside the candlesticks, that's oftentimes a signal to GTFO and get out. So not all the time, but it's something to pay attention to. It should at least alert you to expect things to slow down and pause. Actually, I do write about them. So here's the other thing. Why do we use 9, 26, and 52? Because Hosada did. And the idea is that in the trading, I don't know if it's still like this, but the trading week in Japan was 6 days a week. 9 is 1.5 weeks. There's 26 trading sessions in a month, 52 weeks in a year. 26 is half of that. Do not change those levels, okay? And I don't I don't care what genius in TradingView chat or TikTok or whatever. By the way, if you're watching people for technical analysis on TikTok, just give me your money and I will waste it for you. Because don't don't get your stuff from some bros. It's just ugh, it's sad. But let me repeat this. Don't change these levels. And some people are going to say, well, why we should change them because crypto is open 24/7. We should probably change them. No, don't. And there's a lot of research into why you shouldn't because it's bad. So do not change those levels. Except this guy in this book, Kunitz's book, which is the one I recommend as your, if you're gonna get a book, I think you can get this. Yeah, you can get this on Amazon. I'm not gonna share some link to go buy it. I'm just like, I just like to teach, and here you go. So, but Kunitz's book, he actually gets ballsy and has a little section about how to anticipate changes or get ahead of changes that may happen. And he suggests using, for like the 5-day trading week that we have here in the West or the stock market, is 7, 22, and 44. I have, I think back in 2021, I spent about 6 months not using it to trade, but just to compare against every piece of analysis and trade I was doing. And I didn't find it to be very, and this is mostly in crypto though. So I didn't really find it to be that great. But the thing is that just because somebody wrote it in a book, I mean, hopefully, some of these other authors and experts in Ichimoku, maybe some traders in Japan, try to do this and decide to implement it in their own, and they'll test it, like use the scientific method and test it, see what kind of results you get. And if we get enough people who say yes, this is effective, or it's a little bit risky but it's still effective. I mean, I don't know enough to want to risk my money doing it, but because an expert did write about it, I figured, what the hell, why not put it in there and check it out yourself. Okay, so let's take a peek at a chart. And Tezos is on a tear, by the way. Let's look at why don't you guys put something up that you want me to take a peek at? I'm just going to look at a foreign currency pair here real quick. And I want to just kind of show you, how the cloud is constructed quick. So this green line, this is Senku Span A up here. All right. So if I take a little arrow, maybe. Oh wait, because I thought TradingView added an arrow thing. Well, you can put the ending as. Damn it. Let's see. I thought they changed that. Yeah. Yep. Okay. So that black arrow is pointing to, make it a little bigger so that you can see it better. So that's Senku Span A. That is the midpoint. Let me just hide the candlesticks now to make this a little easier to kind of see. Oh, that's not what I wanted to do. Okay. So here's the blue line is the Tenkan-sen, or the Tenkan-sen, or the conversion line. The red line here, red average. That's the Kijin center of the baseline. Senku span A is the midpoint of these two levels. So if you just look, if I put my cursor here, just kind of roughly in the middle of those two, and just move it across the screen, that's how that level is plotted. All right. So it's moved 26 periods in front, ahead of where the it's the midpoint of these two thrust forward 26 periods. And then the Senko span B, all that is, it's the midpoint of the highest high and the lowest low of the last 52 candles. And it too is pushed forward 26 periods. So that is how the cloud is. That's how those two levels of the cloud form. By the way, I'm just going to pause here before we look at some other things. Any questions? There is a slight delay in the stream too, so. Oh yeah, Jamie, I saw yours. The stop loss depends on the trading strategy you are using. There's a lot of the systems use the conversion line or the Tenkan-sen as a kind of trailing stop loss. Yes. Yep. Yeah, I'm gonna show, like, there's the ideal Ichimoku strategy. That's what it's called. And I think all of these are in Patel's book, but unless, let me just take a quick peek here. You have ba-dum. I was just kind of just realized I was flipping through Kunitz's book. The last third of the book is fantastic because he tackles a lot of things that a lot of people who are familiar with other, like, tools, oscillators, other indicators that he looks at how to use them. Okay. Question is that trading. Okay, I don't know about the trading system. Yeah. So let me go back here, and you can screenshot this or write it down. But this is one of the strategies, and that's called the ideal Ichimoku strategy. This is out of Manesh Patel's book, but I think it's the exact same thing as a few of the other authors. So, going long or short, these are the rules. So long trade is price has to be above the cloud. The conversion line needs to be above the baseline. The lagging span needs to be above the candlesticks, and the cloud ahead, so the future cloud, needs to be green. So let's just take a look at the hourly chart. Damn, look at the Aussie dollar there. Shit, I hate it when I miss those moves. Okay, well, this is a good one. Okay, this is actually a fantastic one. So this is on the euro dollar. Oh, let me actually pull up the chart. Okay, so price is above the cloud. Yes. Is the conversion line above the baseline? No. So we need to wait for that to happen. Is the lagging span above the candlesticks? Yes, but it's not an open space. All right. What kind of is? So this is open space I'm looking at. Here's the lagging span. Let me do another arrow. This black moving average looking thing. If I move my mouse over 1, 2, 3, 4, 5, 6, 7, so it's less than 10, more than 5. In 7 hours, if price doesn't change, it will run into the candlesticks, and that's the warning sign that consolidation is likely to happen. So what I want to wait for, I mean, if you're aggressive, it's cool, but if you want to play it smart and and safe, wait for price to close where it would put the lagging span or the Chiku span above all the bodies of the candlesticks over the next 10 periods. So it would need to close up at 109.86 or so. And the cloud ahead is green. So there's only two conditions on the hourly chart that you'd be waiting for to go long using that strategy, and that is the Tenkan Sen above the Kijin Sen and the lagging span just a little bit higher, so it won't run, so it'll be an open space. So this is a good example of a time frame and an instrument that is in good conditions for a possible long entry using those trading rules. And let's see, you J-Man, you asked me to look at you wanted oil on the 12-hour. That's one commodity I will never touch again. Oil. It's weird that Gary Gensler and most of the SEC, they were just claimed that Bitcoin is so heavily manipulated. It's used by terrorists and blah 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 blah. Just horrible people all over the planet. And we just can't be sure that it is blah blah blah. But oil, totally non-manipulated market. Definitely not ever used to fund terror. Oil, perfectly okay. Perfectly okay. By the way, the US dollar has a lot more sin behind it for terror financing and other things than Bitcoin or any other crypto. There, I'm gonna get off my preaching thing about that. So you want to look at oil? Let's look at oil futures. No, let's look at WTI, the CFD 12-hour chart on the Ichimoku system. Well, that. Oh, there's another thing to think of if you're looking at a chart. If price is below the cloud, it's generally interpreted that is a bearish market. So you don't want to go that instrument is bearish, and you don't want to go long. And so you really only want to ever look at short trading, at short setups. Whereas if price is above the cloud, it's inherently bullish, and you only want to take long setups. Now, looking at this on the 12-hour chart, and this is looking really nice if it can close. I mean, I don't know, depending. The hang up is that lagging span or the Chiku span at 75, 30, 75. If we were doing the contracts, 25, is it 10 cents? Sorry, on oil futures, 10 cents, right? God, I haven't touched those in a while. 75.30. You get the lagging span above the candlesticks and an open space on this chart. That would put the close above the cloud. This is a tough nut to crack for oil. Yeah, I mean, it looks very. Let's see the oscillators. Well, it is definitely not in bull market conditions. Where? I don't even have those on there. Okay. Da, da, da. I mean, just looking at the oscillators here, I mean, if it does break out, oil looks like it will have a really nice breakout, but this is a tough nut to crack, this zone here. Also, this looks very bearish continuation setup. And you look at the daily chart, your upside potential's limited to that 75-60 zone. Yeah. That's that. So let's talk about multiple time frames. So I use most of the time. 1 second here. Monthly, weekly, daily. So your trading software may show you different, but I like to look at the monthly chart, the weekly chart, and the daily chart. Any specific reason? No, because I just like to look at those. They seem to work for me. That should answer that question. This is the thing that I wanted to make a point of, because I don't really talk about it a lot during this session, but this is kind of like a freebie. Well, it's all a freebie. This is something that I discovered for myself, and I talk about it a lot, and it's proven to be very beneficial in my own trading. But you'll want to check it out for yourself. Whatever it is that you're trading. Let's look at Tesla. Oh, those are the commodities. Let's scroll up. Yeah, let's look at Tesla. Okay. Daily chart of Tesla. And I want to get rid of everything except the Tenkan-sen or the conversion line. Oh yeah, TradingView uses the English translation. So one thing that you should pay attention to, and it's easier if you take the wicks off the charts. Some trading software doesn't allow you to do this, but watch for, I'm going to go to the hourly. Watch for periods where the bodies of the candlesticks have these sizable gaps between the bodies of the candlesticks and the Tenkan-sen. All right. Try to think of the Tenkan-sen and the body of the candlesticks is like a very unhealthy, codependent couple. They hate each other, but they hate even more being away from one another. So, you can see periods where it's like, oh my God, I love you, blah, blah, blah. Then it's like, God, I hate you, you're suffocating me, blah, blah, blah. And then it's like, oh my God, I can't live without you. That's what happens a lot here. And, I'd say on average, doesn't matter the time frame or the instrument, within 5 to 8 candles, if there's huge gaps between them, you'll see it correct back. Now, or return to equilibrium, using the Ichimoku kind of verbiage. Now, there's 2 different ways that a market can return to equilibrium. That is price or time. By price, that's represented by the gap closing, where you see like these spots right here. Let me highlight that. Like, this is an example of price correcting. Oops, that's not what I want. Like right here, it was big gaps, came back up to hold hands again. Big cat fight. I hate you. No, I hate you more. There's big gaps between these two. It cracks back. The one that doesn't happen as often is the time-based return to equilibrium. So, I mean, here, this highlighted area, you can see there's quite a long time where you see the bodies of these candlesticks away from the Tenkan-sen, but you also see that there's a kind of a consolidation. It doesn't go up any higher. So what happens is time catches up. So the return to equilibrium occurs over time, where the Tenkan-sen catches up to where price is at, and then That's what happened. So definitely watch out for those kinds of things. Any time frame, any market, and it's especially like people who are like to fade markets or who like to trade counter to what's going on, or you like to identify the extremes. I know people have told me that this has been one of the that looking at the conversion line, the Tenkan Sen with these gaps has. And people have emailed me and messaged and reached out and said that this was very, very helpful for them, um, to where this is what they do now. I have not ever kind of tried to trade exclusively off this idea but just something to think about. Yeah, let me put everything back. Let's see here. As far as the stop losses, I mean, that's hard to answer in a general way because um, people's risk tolerance is different. So within the Ichimoku system, there's multiple levels that you can use as a stop, but that you can use the levels as stops, or you can use there's different. I mean, that's a whole nother conversation. Um, but with the trading strategies that are that I talk about in other classes, there's using the Kijin Sen and or the Tenkan Sen as kind of a trailing stop loss is what a lot of Ichimoku traders do. Yeah, I mean it can be used in any market. Yeah, there is no right or wrong market for it to be in. I mean, obviously, if it's a cryptocurrency that just came out this week, you're gonna have a hard time using it on a daily chart. Um, you know, in fact, there's a lot of altcoins where the monthly chart, there's still not an established. There's like I think Cardano, for example, just got on the monthly chart. Uh, yeah, the oldest data goes back to November 2017. It's still not it's still not trading on the monthly chart with a full Ichimoku system. The first time it'll actually trade with all of the Ichimoku indicators will be in April of 2024. So, yeah, a few months away. Um, and then Cardano, for the first time in its in its short life, it will have on the monthly chart a full Ichimoku indicator setup. So, yeah. Yep, it is recorded, and you'll be able to rewatch this after YouTube does their thing to you know do whatever. So yeah, well, I'm gonna leave it there, and wish you all kept it at about an hour, which is great. And I hope you all have a good rest of your evening. Have a good Friday and weekend, and don't trade like a moron.